Bitcoin ETFs see biggest inflows since January with $381 million boost over Easter. United States-based spot Bitcoin exchange-traded funds experienced their most robust day of net inflows since late January, demonstrating significant investor interest and market resilience over the recent Easter holiday period. According to data compiled by CoinGlass, the 11 Bitcoin tracking ETFs operating in the U.S. recorded a combined net inflow totaling $381.3 million on Sunday, April 21st. This figure represents the largest single-day influx of capital into these investment vehicles since January 30th of this year, when the group collectively attracted $588.1 million shortly after Bitcoin's price surpassed the six-figure mark for the first time. The strong performance on April 21st was notably led by the ARK21 shares Bitcoin ETF, known by its ticker ARKB, which alone saw net inflows amounting to $116.1 million. Following ARKB, the Fidelity-Wise Origin Bitcoin Fund, or FBTC, secured a substantial $87.6 million in net inflows, while the Grayscale Complex, including its flagship Grayscale Bitcoin Trust, GBTC, and the recently launched Grayscale Bitcoin Mini Trust ETF, BTC, brought in a combined $69.1 million. Even BlackRock's iShares Bitcoin Trust, IBIT, which stands as the largest Bitcoin ETF by total assets under management, registered a healthy $41.6 million in net inflows, a figure slightly lower than its levels prior to the holiday weekend but still indicative of steady and consistent demand from investors. These inflows occurred despite a challenging backdrop in traditional U.S. equity markets following the holiday break. On Monday, April 22, the S&P 500 index declined by 2.4%, while both the Nasdaq Composite and the Dow Jones Industrial Average saw drops of 2.5%, signaling broader market caution. However, crypto markets largely defied this downturn, maintaining upward momentum throughout the three-day holiday weekend. The total market capitalization for all cryptocurrencies expanded significantly, growing by an estimated $800 billion to reach $2.84 trillion. Bitcoin itself played a crucial role in this surge, climbing above the $88,500 level, marking the first time it had reached this price point in 4 weeks and pushing its own market capitalization past $1.75 trillion. The notable resurgence in ETF inflows, coupled with the positive price action across the broader crypto market, suggests a strengthening of investor confidence in Bitcoin and other digital assets. Even amidst prevailing macroeconomic uncertainties and volatility in traditional financial sectors, recent weeks leading up to this inflow surge have presented headwinds for Bitcoin ETFs, as investor sentiment had been negatively impacted by escalating trade war rhetoric from U.S. President Donald Trump, which introduced a layer of political and economic uncertainty. Bitcoin had dipped below the $100,000 threshold in early February and reached a yearly low of $74,773 on April 7, partly attributed to the impact of widespread tariffs and the subsequent downturn observed in traditional markets. Looking at the broader landscape of digital asset investment products, the preceding week saw relatively modest overall inflows totaling $6 million, reflecting a mixed and somewhat hesitant investor sentiment prior to the Easter weekend surge. Early week inflows were reportedly reversed following the release of strong U.S. retail sales data, which appeared to trigger $146 million in outflows from these products midweek. Geographically, the U.S. was the primary contributor to outflows, registering $71 million, while European and Canadian markets demonstrated a more optimistic posture, with Switzerland, Germany, and Canada recording significant inflows into digital asset products. Within the asset classes, Bitcoin itself experienced fluctuating sentiment throughout the week, ultimately concluding the period with a net outflow of $6 million. Conversely, products designed for shorting Bitcoin marked their 7th consecutive week of outflows, suggesting a waning conviction among investors betting on price declines. Ethereum, the second largest cryptocurrency by market capitalization, continued its recent trend of outflows, losing $26.7 million during the week, bringing its cumulative outflows over the past 8 weeks to a substantial $772 million. Despite this recent downturn, Ethereum still maintains strong year-to-date inflows. Standing out amongst other altcoins, XRP attracted significant investor attention, recording $37.7 million in inflows for the week, positioning it as the third best performing digital asset product this year in terms of inflows, with $214 million accumulated year-to-date. The strong performance of Bitcoin ETFs on April 21st, therefore, marked a significant positive shift in sentiment following a period of mixed flows and market challenges, underscoring renewed appetite for exposure to Bitcoin through regulated investment vehicles.